Welcome to the daily update, where I'll go over the action in the market for Tuesday, January 23rd, and then we'll see how things look for Wednesday, January 24th. It was a pretty quiet day. We didn't have any economic reports that came out. Volume dropped to a little bit below average, but we did finish up for the S&P, so that set a new all-time high. We're still looking at an extreme positive condition, but when the market is more positive, that can last for a period of time. Of course, there are some things that we need to be concerned about, and I'll go through that in the video. So let's go back and talk about what happened. Right at the open, we had a flat open, and prices pretty much chopped sideways. As the day unfolded, prices drifted lower. We fell below the unchanged level, and then we slowly climbed back to close just about at R1 at 48.65. We were up 0.29% on below average volume. It was just about average, but slightly below. We are positive with our technicals, but looking extreme positive. There are some negative divergences that we've been keeping an eye on, that we want to keep watching those things. And because there weren't any economic reports, the market didn't really have anything to play off of. It's not really paying attention much to the geopolitical events right now. And so the market is just kind of in a holding pattern as it waits to get data. Not so much in Wednesday's session, but Thursday and Friday will be some big employment or economic reports that come out. Some comments that we can make: we did set a new all-time high for the S&P 500 as well as the NASDAQ 100 because they had up days. Small caps are still continuing to show some improvement, and the mid caps are looking okay as well. We're wondering, is this January effect actually going to come back and make another appearance, at least in January at some point? The mega caps did outperform. They had some buying interest later in the day, and that helped pushes the mega caps up, and so they ended up being stronger than the rest of the market. Discretionary is still under pressure, and we're keeping an eye on Tesla right now because it's one of the biggest stocks that's really having an impact on the discretionary sector. On a short-term basis, we have the Stochk RSI, the Williams Percent R, the CCI 14 and 20. These are the usual charts. Our stochastics, the standard deviations chart, and then a new addition to the list is the RSI based on 9 periods. Intermediate term, also, our list is getting a little bit longer. We have the CMB composite, the rate of change, 50 periods, the PMO studies. They're still extreme when we look at all of our oscillators together, but they're starting to turn back and look a little bit more positive, and I'll show you those charts. The Sean Trend Meter, the RSI based on 14 periods, that's another new addition here that we actually was added yesterday, but it's continuing over into today's session. And then the Bullish Percent Index, both for the S&P and the NASDAQ 100, and our longer-term new high, new low study for the S&P. Long term, we still have the 150 and 200 period simple moving averages that are looking extreme. This is the scenario that the market's been dealing now with for a couple of months, at least, where the Fed might be done raising rates. That's kind of the overall scenario right now. And they could possibly even cut rates as we go further into 2024. But we want to keep an eye on the economic reports, because if they come in stronger than expected, that may keep rates the same, or if they're really strong, even have the Fed come back in and raise rates. The dollar was up and interest rates were also up. We're at 4.14%. This rise in interest rates has been a concern over the last few sessions. We didn't see that in Monday's session, but late last week and in Tuesday's session, interest rates are going up, but it's not having that much of an impact on stocks. That may change at some point. The 10 to the 2 and the 10 to the 3 month, these yield curves have been inverted for a long time now, and they remain inverted. Sentiment is positive. We're not extreme yet. That's when we get to 75. Right now, we're coming in at 73, where we had been at 71. We are showing a little bit of an improvement with our trend, at least as far as strengthening. It is positive. The green line is on top, but with the short-term ADX, we're just starting to see the ADX come above its moving average. We're not quite there yet with the intermediate term chart. We're still positive with the bias with the up day, and the last number of days have been up, so our momentum is positive as well. We didn't get any economic reports in Tuesday's session, and we're going to get a whole list in Wednesday's session, but they're not all that influential. Here's one chart I thought was interesting from Isabel Net blog charts. This is just showing how long we've been inverted with the 10 to the 2 yield curve, and we're going up into almost 400 days now, trading days, and this has gone on where other times you look in history where when it goes inverted, the last time we were about this long was back in the 70s. The other times up before this saw a real shorter length of the inverted yield curve. Here's our intraday chart. Not a real gangbuster day, pretty much a yawner. We had a flat open. We drifted negative for a while, came back positive. Any strength that we saw really came late in the day, which is encouraging, and we closed at the high just about at R1. Here's the intraday chart, pretty much flat for the overall session, seeing some late day strength, and we're up just a little bit with the initial overnight session with the futures. Here's a chart that's looking a little bit more positive. This is kind of encouraging. We have the blue line on top. That means that growth is outperforming value when we compare them on this intraday chart. When we look at the ratio between them, we are going sideways right now, but at least we're holding up as far as growth versus value. We want to see some more improvement from this. It's a little bit of a concern since we're flattening out. We've been that way for the last couple of sessions now, but at least we're not going down at this point. End of day, we were up more when we look at growth versus value with the large caps, even though both were up. The rest of the market, it was down more for growth when we look at the mid caps compared to value, and also down more with the small caps compared to value. But we're continuing to go up overall. We're getting more to the higher end of this range and actually possibly even breaking out a little bit when we compare small cap growth to small cap value. This could be positive for the small caps if it can continue. We came down just a little bit with the mid caps after we had been breaking out here. Overall, we are showing some improvement in this area as well. And we turned down just a little bit when we look at the S&P 500 growth to value ratio on an end of day basis. We have been coming back up. We want to see this continue to go up if this is to be more positive. We're keeping an eye on discretionary. Where at the top is the S&P. We were pretty much sideways with discretionary when we look at the equal weight ETF. We ticked back up a little bit with the Staples equal weight ETF. And so we came down a bit with the ratio. We want to see this going up to have this not be a negative divergence. Keeping an eye on our trend. We're coming back up with the ADX, but we're still below the moving average. The green line is still on top. This is where we're starting to cross now with our shorter term ADX chart. It's coming above the moving average. So this is suggesting that we're starting a trend. Right now, that trend is positive with the green line on top. We were below average as far as volume, but lately we've been seeing a pickup in volume. Keeping an eye on sentiment, we're really dropping off with the Ulcer Index showing there's no fear in the market right now. We dropped with the VIX when we look at the line chart as well as the bar chart. We're also dropping with the VIX of the VIX as the market has been going up. The equity put call ratio ticked up a little bit. So we saw a bit of an increase in hedging, more people buying puts than they are calls. But when we look at the 5 period, we continue to decline after getting an extreme positive reading. This is positive for the market. Advanced decline line. We're coming back to previous levels here based on price, but we're still looking positive. We're showing a bit of a lag when we look at volume, even though it is improving. We're topped out with our new highs. We saw a drop off in the raw score of new highs, but we're pegged at the top with our 5 period, and we are showing some improvement with the 10 period. So for right now, this is holding up. We're above zero and advancing with our advanced decline ratio. That's positive. We saw a little bit of a tick up with accumulation distribution. We were a little bit concerned after Monday when we saw this come down. The fact that it went back up after Tuesday is encouraging. And we're seeing some improvement with the Chaikin money flow. The moving average is starting to turn and go back up. This is another smart money gauge. Looking at our advanced decline line studies, we're going back up with the NYSE common stock, showing some improvement with the S&P, the mid caps, and a little bit, but still lagging with the small caps. Here's the chart where anytime we go up for the day, since we set a new all-time high, the next day, if we're positive, we set another new all-time high. On the bottom, we did drop down to about the moving average. No changes in the decision point scorecard. We do have some extreme positive indicators in the short term. That includes the Stochh RSI, the Williams percent R, the CCI 14, and the CCI 20. We're not extreme, but still looking okay with our 20, 50, and 200 period moving average studies. We're getting a little extreme with the boom indicator in the 20 period. We're just barely coming up to this line. We're showing some improvement, but not extreme when we look at the 50 period moving average, and we're going back up after chopping sideways with the 200 period moving average study. The force index is still positive and above zero, and we're above the midpoint, and the midpoint is also going up. So that's positive. We're extreme with the stochastics in the short term, intermediate short term, and the long short term. We're up into the +3 channel with our standard deviations chart, so that's extreme positive. The balance of power is going back up, and it's above the midpoint, so that's positive. We're still positive with the go, no go. We see the highest high blue line here continue to go up, and we're above the midpoint, so this is still positive. The TTM squeeze is showing some improvement, and we're changing over to the lighter shade of blue, so that is more positive for this chart. We're getting a little extreme with the CMB composite. We're going above this black line. We are still positive with the ease of movement. We dropped a bit here with the Arun. We're no longer extreme. We saw a little bit of a decline with the buyers, but a real increase of the sellers as it's measured by this chart. That's why we're coming down, but we're still positive since the oscillator is above zero. We ticked up just a little bit with the S&P McClellan oscillator, but we're still below zero. So our summation index based on price is declining as well as volume, even though we're starting to round out just a little bit here. We ticked down also with the NYSE McClellan oscillator. So we're declining with the NYSE summation index based on price and volume. We're looking a little more positive here. Based on price, we've crossed above zero with the Swenlin trading oscillator. We're coming right back up to the 0 point and just barely getting above zero based on volume. We're turning back up slightly with the PMO. That's when we look at the indicator by itself. But when we break out price and volume, we're continuing to decline, even though it's turning up slightly. We tick down just a little bit with the PMOs that are rising after being extreme negative. We're continuing to show some improvement with the buy signals, and we continue to be extreme positive with the PMOs that are above zero. We are positive with the Elder's Impulse system for the S&P. Also, we're positive with the parabolic SAR. We're turning back up with the slope oscillator. We started to see some improvement here, and that's still continuing. We're starting to turn positive with the MACD. This is more intermediate term. So with all of our oscillators, the slope is going back up, the TSI is turning back up, the MACD, the PMO, and the PPO are showing some improvement. We're turning back up, but we're still negative with the TRIX and KST. These are our longer term oscillators, and we're still well above all of the moving averages here in our moving average tree. We're kind of chopping around just above 70 with the bullish percent index for the S&P. We ticked up a little bit with the NYSE bullish percent index, and we're still extreme positive and climbing with the NASDAQ 100 bullish percent index. We ticked back up just a little bit, and we're just under this red extreme line with the Chaikin oscillator, but this is positive. The money flow is above 50 and advancing. That's positive. The ultimate oscillator is turning back up. That's positive. The vortex has the green line going up. That's positive. We're getting just barely extreme with the RSI 14 and the RSI 9. Unbalanced volume is continuing to go up and above an advancing moving average. We're turning back up a little bit here. We're pretty much flattening out with the 200 period moving average, where we're still going up with the 50 period moving average. The Copic curve is now crossing over positive and showing some improvement. We're still extreme positive with the percent B because we have now closed 3 days in a row with the price being outside of the upper Bollinger Band. The R rate of change going back 50 periods, excuse me, is still extreme positive. We're still extreme with the Sean trend meter. I don't have any Fibonacci or line studies because we're setting new all-time highs now. But when we look at the trend, our different charts show the Heiken Ashi is positive, The KEGI is positive, the Renko is positive, and the three-line break is positive. Longer term, we're still going back up with the 150 and 200, and we're looking extreme positive. We saw the S&P outperform just a little bit when compared to the equal weight, but they're both hanging in there for right now. So our ratio came down just a little bit when we look at the S&P weighted index to the equal weight index. We ticked down just a little bit with the transports. We also ticked down and did not set a new all-time high with the Dow. We're still seeing this longer-term negative divergence. We continue to decline with the utilities, and the transports are still underperforming the Dow. And we're going back down a little bit here with our transports to S&P 500 ratio. We want to see this going up, and right now it has been going up, but in Tuesday's session it ticked back down. We're seeing the relationship between the two get a little bit stronger here between the S&P and the transports. The higher this gets, that means they're going in the same direction at the same time. The Dow was down just slightly in Tuesday's session. The diamonds, though, are still positive. And we're coming right up to this R1 level here that is acting as overhead resistance for the NASDAQ. We're a little bit above this R1 level with the NASDAQ 100, and this may be providing some support. We are still positive with the QQQs when looking at the Elders Impulse system. Momentum is now switching back to positive with the PPO when looking at the NASDAQ 100. The small caps, they ended up being down, but we're still above this pivot point right here. We do have a recent golden cross as far as the trend. We still remain positive with the Elders Impulse system for the small caps. And we're right at this resistance level. We broke above it. We opened above this and then ended up closing down below it. So when we look at the Russell 2000 small caps, we're right at this level that is kind of turning into a big deal. We're still above 50 with the RSI, even though it ticked down. Momentum is negative, but it's starting to show some improvement. The mid caps did have a down day as well. So far, they're still above this pivot level. And they still remain positive with the mid caps when looking at the Elders Impulse system. The FANG index is still hanging in there and doing well. This is more the mega caps, and they saw some favor in Tuesday's session. The financial sector was back up, and it's still looking better. Haven't shown this chart in a few days. The dollar was going back up. This could, at some point, provide some headwinds for stocks if it keeps going up. But when we look at the trend, we did see a recent death cross here. We were up with the 10-year yield. We were down with the 10-year based on price. Then looking at our possible positive scenarios, we're still hanging in there with the Qs to S&P. This is a concern. Discretionary is underperforming the S&P. We were flat with large cap growth versus large cap value, but we're still outperforming. So the large caps were flat. We're ticked down just a little bit, but still looking good with the mid caps. We actually went up slightly with the small caps. We're still extreme positive, and we've been here now pretty much since the latter part of December. When we look at the 10-day average of the S&P 500 highs minus the lows, we're getting just a little bit back above zero now. This is a broader measure market. This is a 5-period moving average of the highs minus the lows across the Amex, NASDAQ, and NYSE. The fact that this is going back above zero is positive. And we're still going up here with our 50-period moving average study of the new highs, new lows for the S&P. And we're really starting to go up here with the S&P to utilities ratio. That could really give some more support to the S&P. And we're looking better here with our 19-day exponential moving average of the advanced decline ratio for the S&P. We're back above zero based on price, and we crossed back above zero based on volume. We're kind of bouncing a little bit after really declining with our Staples to S&P 500 ratio, but the fact that this is declining also is giving support to the S&P. So what's our outlook for Wednesday? We're wondering about this January effect. Is it going to come back and actually last more than a day or two? The technicals are positive and showing some improvement, but we do have some extreme positive readings. We will get the MBA Mortgage Applications Index, the S&P Global U.S. Manufacturing PMI, the preliminary reading, and we're going to get the services preliminary reading as well. And then we're keeping an eye on the different geopolitical events to see if they have some kind of an impact on the market. Here's the economic calendar. We're going to get some big reports on Thursday and Friday. Durable goods will be coming out on Thursday, as well as the first reading of GDP. Then we're going to get the PCE prices on Friday. Seasonally, we look kind of a little bit different here. We're neutral to negative with the Dow, neutral to positive with the S&P, where we look more positive for the NASDAQ. We are in the week after options expiration, where we are typically up more than down. Here's the Carson chart showing how we just pretty much chop for the first part of the year, going through January, then into February, as well as followed by March, which usually is how the months go, before we see some strength later in the year. We will be on the 16th trading day of the month, where we do see a little bit of positive seasonality during an election year, wondering where we're at with the whole January effect. We might see some weakness here, according to this chart, after we spend some time chopping sideways. Just be aware of that. We're pretty much flat with the Stock Traders Almanac statistics. We see a little bit of weakness before we do see some positive seasonality. And we're kind of going along with this, where we have the sitting president who's running for re-election. That's the green line, where we typically see more strength than we have been. But at the same time, the S&P is setting new all-time highs. We will be in Wednesday's session, which tends to be the most negative day of the week, at least according to how things played out in 2023. So our scenarios can't really go with the down one because we are positive, even though we are overbought. We could go with the up one for right now, but as I've been warning lately, we are overbought, and the market's probably going to play off how it's interpreting these economic reports that will be coming out. We're not in a sideways trend right now because our ADX charts, both in the short and intermediate term, continue to be above 20. They are starting to turn back up and could suggest that we're getting into a trending environment. The warning signs, the risk on posture, it's just not behaving all that well right now. Some days it shows some improvement, but other days it continues to decline. We're still seeing that negative divergence between the transports and the Dow, as well as the S&P. The 1 to 3 month short-term bond spread continues to be positive where it should be negative. Positive side, we, for the most part, have been seeing an improvement with growth. The daily special K chart is positive. Our equity put call ratios continue to go down for the most part. Some of them are still ticking back up. As long as we continue to go down with these overall, that tends to give more support to the market. Our oscillators are showing a lot of improvement, but they're pretty close to being extreme positive again. The parabolic SAR and the vortex charts are positive. The bullish percent index for the S&P and NASDAQ are positive, but they're both above 70, so they're extreme. The Zohorchak method is still positive. The Kopit curve is positive. We're seeing some improvement with the NASDAQ 100. When we look at the PPO to measure momentum, we're still dealing with longer-term uptrends with the Russell, small caps, and mid caps. Small and mid cap growth, I showed those charts, is looking more positive. It's still in a range, but it's at the higher end of the range. And the financial sector is positive, and our new high, new low study for the S&P is positive. So our conclusion, we're positive, we're showing some signs of improvement, but we are overbought. That's what we're looking at in the short term. Intermediate term, our list is getting even a little bit longer. We're also overbought in the long term, but we remain positive. Thank you. I hope you found this helpful. Have a really good day, and I will talk to you in the next video.